Greeting, welcome to Ken's Corner. I've been thinking a lot about business valuation. As I mentioned in a previous Ken's Corner, this process of merger and acquisition can sometimes be a tricky business, and business valuation is probably one of the trickiest parts. And what business valuation is deciding what your business is worth. And I will literally tell you that there's probably half a dozen different methodologies for determining business valuation. But the bottom line is a business is worth what someone is willing to pay for it. And what someone's willing to pay for it is contingent upon several things. Number one is how much the seller wants to sell the business and how much the buyer wants to buy the business. Those are the qualitative factors. But the quantitative factors say, let's take a look at the numbers. And there's really several schools of business valuation. One of them is asset-based, and that is doing a value of either the market value of the business assets or what the book value of the business assets are, and using that as the primary determinant of value. I will tell you, those situations work best in companies that are capital intensive. In other words, companies with a lot of machinery and equipment or a lot of hard assets to put value on. The other primary school is an earnings approach. And what that is that bases value on the primary level of value is based on what the earnings potential or the profitability of that company is. And there are several ways, there are several schools of measuring that, and I don't want to go into all the details with you, but I think what unfortunately for me, and I know that this is contrary to what many people who are business brokers like to do, who simply like to do what we would call a times earnings approach. And although that's a simple method, I think it's an oversimplified method because it doesn't take into consideration several of the other factors involved in the valuing of business. So we have the primary form of asset-based. We have an earnings-based. What I like to use is a form that blends both earnings and asset value together because it gives a more comprehensive valuation of the business. There's lots of tricks and trades to this, and I say tricks in a pretty superficial way. There's lots of nuances of how businesses are calculated and what things and as we say adjusting balance sheets and profit and loss statements for add backs and things like that. But I will tell you that it can be a complicated business, and you really should, if you're going to think about buying or selling a business, get a professional involved who's used to doing a fair amount of business valuation work to help you in doing that. We've been doing it for a lot of years, and it's always amazing what kind of stuff you can find when you're doing this sort of work. If you've got any questions about something that you're considering or would like us to take a second look at a project or even a first look at a project for you, feel free to reach out for us. We're happy to do that. Take care and be well.